Welcome to Way to Commerce. Please subscribe to Way to Commerce. Today our concept is ledger. Journal does not give the summary of the several entries relating to a particular item. This deficit of journal is overcome by another book called ledger. Ledger is also called Book of Accounts or Book of Final Entry. In this book, accounts are prepared for every debit and every credit aspect in a journal. So it's simple. Ledger is also called Book of Accounts or Book of Final Entry. So in this book, that means ledger, accounts are prepared for every debit and every credit aspect in a journal. So, meaning of an account. An account is a classified statement relating to an item. The item may be a person, an asset, a liability, an expense, or an income, etc. So account is a classified statement. So it gives all information. So classified statement relating to an item. So the item may be a person or an asset, a liability, an expense, or an income, etc. The amount of an item gives the summary of all transactions relating to that particular item. So ultimately, the amount of an item, the account of an item gives summary of all transactions relating to that particular item. For example, if salary account an account resembles the shape of English letter T. The specimen of an account is given below. Name of the account. So it is the T form. So the account is the T form. So name of the account, debit side, credit side. So debit side, date, particulars, JF, amount, rupees, date, particulars, JF, amount, rupees. So JF means journal folio. Stages in the preparation of an account. So next of all, stages in the preparation of an account. So there are two stages in the preparation of an account, namely first one posting and second one balancing. There are two stages in the preparation of an account. First stage is posting, second stage is balancing. So the first stage, posting. The first stage in ledger is called posting. The process of transferring entries in journal to their respective accounts in ledger is known as posting. So posting is the process of transferring entries in journal to their respective accounts in ledger is known as posting. Posting is done on the basis of entries written in journal. After posting, some entries are come on the debit side and some entries come on the credit side of each account. Second stage, balancing. After posting is completed, the two sides of the account must be totaled and the differences between the two sides has to be written on the later side. So here the symbol, the two sides of the account must be totaled and the differences between the two sides has to be written on the lighter side. The difference is called balance carried down. This balance reflects the net result of the account. The final balance may be a debit balance or a credit balance. Balancing of an account is the second step. Once we go through the example, so this is the debit side, this is the credit side. If debit side of the amount exceeds the balance carried down comes credit side, that means by balance carried down, so here amount will come. So ultimately the total of the two sides are equal. So it's simple. We discuss in detail in problems. Next, trial balance. After balancing every account in ledger, we find that some accounts show a debit balance and others show a credit balance. All accounts showing debit and credit balance are to be shown in a classified manner in a separate statement called trial balance. So trial balance is the simple. All accounts showing debit and credit balances are to be shown in a classified manner in a separate statement called trial balance. This statement is also known as a list of ledger balances. Advantages of trial balance. The following are the advantages of trial balance. The first advantage is it helps the business to know the arithmetical accuracy. Second advantage, final accounts, namely trading and profit and loss account and balance sheet can be prepared from the trial balance. Please subscribe to Way to Commerce. Thank you.